Alright everyone, Cowboy Trades here. Welcome back to the channel for another update on Bitcoin. So, the time is finally here. The next Bitcoin trade, let's talk about it now. So, diving right into things, why have I decided now that the time is to be shorting? Well, let's talk about it. Let's dive into the news to start with. Not too much to update. Like I said in my previous video, Monday, Tuesday is going to be pretty boring, but we have had a new Fed event. Evans has basically said the Fed is on track to reach a 4.5% interest rate by March, with little difference between individual policymakers. Now, if we look at the interest rates at this moment in time, you can see they're residing around about 3.25%, which would entail more interest rate hikes up until about March. So, definitely a long way to go. More pain will be coming into these markets. Speaking about more pain in these markets, let's talk about the 10-year yields. Now for the euro has just pushed up today, very slightly, making new highs since the other day. If we do zoom out, you can basically see the 10-year yields are absolutely exploding. They're the highest levels they've been since about 2014. And when we do come over to the US 10 years as well, the 10-year yields, you can see they've basically pushed up to these 2010 levels. We haven't been here for a while. If I zoom in on the lower time frames, you can literally see in the past hour, the past 4 hours or so, we've absolutely started to erupting. With the US 10 years pushing up to the upside, we can expect more financial tightening. We can expect the DXY to continue getting strength. We can expect the SPX to get weaker. I'm going to talk about how this affects Bitcoin and where my next trade is going to be taking place in a second, but let's dive into the SPX, because I've been looking at this chart for a while, and I told you the last time we looked at this chart that I was targeting all of these levels all the way down here. In fact, I highlighted multiple price gaps, 2 of these price gaps right here, and as you can see, the absolute floor of the support down here that we established around about June 2022, which was the lows that obviously correlates to that 17,600 Bitcoin, has been tanked beneath today. So this is one reason why I'm going to be shorting. Once again, I'll talk more about these levels in a second. If you zoom out, you can also see a very similar market structure where we establish a very brutal deviation. We have a lower high, or technically in the higher time frames, it wouldn't be too much of a deviation, but nonetheless, you come back into this resistance, you form another lower high, and as you can see, brutal capitulation soon ensues. You have a slight rally back up. Now this was, there was one over here, there was a little rally, and then you can see we actually got a rally down here, and both of these correlated into a diamond top formation. If we zoom into the 4-hour time frame, and I'll show you which one I'm talking about right now, you can see literally only in the past day or so we've started to form this diamond top formation, and we've really started to push down. We gapped beneath all of these price targets, and as you can see, we're now fully coming down and violating the support box that we've been talking about for a while. If I do zoom out, one of the most noticeable price gaps, if I come down to lower time frames, you can see there is a nice price gap around about 3,540. So from where we are right now on the SPX, if we take this measured move, you can see this is going to entail about a further 2% move to the downside for the SPX. Now, bear in mind, the SPX is down about 1% today. Bitcoin's down a little bit more than that. So we do know that Bitcoin should be getting ready for a more volatile move. Now, before I go into some other reasons, let's talk about why I'm shorting, what levels we're shorting. So we've broken beneath the 786 Fibonacci as well. That is another point. This region that we talked about was round about this 19,300 region. And if we zoom into the volume, I'm going to be talking a lot more specifically about the volume in a second. But on the daily time frame, it looks like we're getting volume confirming this breakdown of the 786 Fibonacci level. We also recently, like I talked about, came into these EMA ribbons. We had that reversion to the mean. We're starting to break down. And I did say I would be shorting from 19,000, but this was obviously before the Euro 10 yields and specifically the US government bonds 10-year yields started to push back up to the upside. So what I'm looking at right now is further continuation for the SPX. We still have about another week's worth of movement to the downside before we should be expecting a bounce. If we come over to the VIX as well, VIX is absolutely skyrocketing, and this is predicting up until about the end of October for further volatility in the tech stocks, being the Nasdaq, cryptocurrency markets, Bitcoin, etc. Come over to the Bitcoin dominance. You can see for the first time in a while on the daily time frame, this has actually started to bounce back. Now, I left it about a week or so to kind of see how this bounce would solidify, because so far we've been having these, bounces, breakdown, bounces, breakdowns, bounces, breakdowns, but this is the first time in a while that we've actually managed to get above the daily EMA ribbon. So I'm going to keep my eye on this, but nonetheless, this would be a worrying signal. If you are a bull, if the Bitcoin dominance starts to continue moving to the upside, it's really going to entail much more brutal capitulations coming for the altcoin markets, which we've been talking about. We've been talking about the total one, which is obviously not the altcoin market cap, but this is losing support over on our volume profiles. If we come over to the altcoin market cap, as you can see, this is just absolutely brutal. We've talked about this before, so I don't want to dive too much into this today. So where am I going to be shorting? From the level that we're at right now, 19,250, 19,300, I've already opened a short position before I started recording this video. Now, what happens if we get a slight move to the upside? Now, with these trades, what I'm going to be doing is I'm going to be running a 10x leverage on every single one of these, meaning that unless we pump up from where we are right now to 21,300, then I'm not going to be liquidated. And I find it highly unlikely that we're going to push up to 21,300. However, I know a lot of people are targeting 21,000 for quite a few reasons. I know as well, daily EMA ribbons have some slight support coming in. Well, not support. We're going to be magnetized to these if we do continue to move down. 19,600, 20,300, and once again, 21,000. These are all regions that I'm going to be adding my short positions from if we do manage to have a bounce. I personally don't think we're going to be having too many bounces. So basically what I wanted to update you on is the next short is in play. 19,300 is where I open mine. This is the 10x leverage. Where is my price target? Well, it's the price target I've been talking about for a while, just coming down into new lows, 17,300. Don't be surprised if Bitcoin does come down, makes new lows, and then bounces for about a month or so. We've talked about this scenario because when we look at the VIX in 2008, this kind of end of October tied in with a better than expected earnings season, which we've obviously talked about. We are coming into in October now. I believe tomorrow we've got Louis Vuitton. Thursday, Friday, there was a ton of them. Go check out yesterday's video if you want to check that out. But as you can see, round about the end of October, we should be expecting a pullback in the volatility. And when we do correlate this to the SPX, this is going to be correlating to a bounce in the SPX nonetheless. E-mini futures also looking dreadful right now. I'm going to wrap up the video super quickly on some oscillators before we do move on to the volume that I did want to talk about at the start of this video. As you can see, the stochastic RSI has not yet broken down. We've kind of been lollygagging. I mean, yes, you can see we broke down here, broke up, broke down, and technically we are breaking up on the stock RSI on the weekly time frame right now. All I really see is a consolidation range. I kind of just see us lollygagging for a tiny bit more before we do get enough momentum to finally push us back down to the downside. On the stock RSI, you can basically see when you start chilling around these levels. We've done this before, you know, you top out, you come back down, you have a further push up. Normally, you don't have too many more peaks than 2 peaks over on the stock RSI. You can see over here, this called a pretty big capitulation. Over here, this called a capitulation, and it called a capitulation over here. And what you can see is the similarities with this. This was actually a higher, this was a lower high, and then you can see from here, when the stock RSI topped out at a lower level, this was another lower high before we started capitulating. Over here, this was slightly different. We did get a slight deviation. We did manage to push up in the price action, but what you can see is these double tops in the stock RSI, especially when they start turning down, always correlate to major brutal moves in the downside. Now, on the weekly time frame for the squeeze momentum indicator, bear in mind the squeeze momentum indicator takes a lot of momentum to actually move it up, down, left, right. Nonetheless, what you can see is we've basically been trading at the same price since the 13th of June. So if we look at how long this has been, about 126 days, it's not surprising that the squeeze momentum indicator hasn't yet started to turn down and start capitulating, because like I said, I mean, we've been the same price for like 126 days. So we haven't had that major move kick in yet. If we do come down to lower time frames, that's a different story. Stock RSI is already starting to turn down very strongly. And if we do look at the squeeze momentum indicator, you can see once again, another higher time frame oscillator. And when this normally starts turning over into dark green, you can basically see if you shorted from this level, you had a good move to the downside. If you shorted from this level, you had a beautiful move to the downside. If you were shorting from these levels where it started to turn dark green and you started to get back in as it started to turn light green, you would have still made profit on these shorts. And then you zoom out to other times and you can see this is really where I think we are. We've been trading at the same price for a very long period of time. Once that daily squeeze bomb starts ticking into the daily bearish side of things, I think, you know, look at the history of this, it is normally a good time to start shorting. So one of the final reasons why I think we should be shorting. I already talked about the somewhat volume confirmed breakdown. It depends on what levels you're looking at. Like previously we've been looking at this triangle pattern, and I did originally say I would love to see a volume confirmed breakdown from 19,000. I would be adding to shorts also if that was a scenario. As you can see, we're sitting on the 786 Fibonacci right now, and a decent amount of bearish volume is starting to come in on the 4-hourly time frame. It's really starting to stack up in the past 12 hours. On the 1-hourly time frame, you can see every now and then we do get these big old spikes in bearish volume. On the subject of volume as well, let's come over to the money flow index. Now you can see since Bitcoin was putting in its all-time high around about this 69,000 region, bear in mind MFI didn't call the exact top, it called the top around about 54, 55,000. It went up to 69, but nonetheless, if you manage to sell round about when the MFI was topping out over here, when it was topping out over here, you can see, you know, we topped at around about 69,000. The next top in the MFI was at 48,000. The next top in the MFI was down here at almost 25,000. You can see the MFI has also topped out again quite recently here when we pumped up to about 20,500. And we've already started to turn down, oops, didn't quite mean to do that. We've already started to turn down very, very fast on this. If I come over to the weekly time frame as well, you can see basically the same scenario is happening. We're running into this wall of sellers. If you sold when the MFI topped out over here, you would have had a beautiful move, about 31% to the downside before. Obviously, as you can see, we did move up to the upside, but nonetheless, with the MFI top on the overextension there, called a beautiful move to the downside. Now, you can definitely draw this a few different ways. I'm just drawing this for the next low. Obviously, we had a bounce from there, so this is what I'm looking at. That was about 52% drop, and if we look at the weekly time frame, since the MFI topped out, it only topped out right here. So we've only been going down for about 6% since the MFI has topped out. In further consolidation, if we're talking about volume, we're looking at the bullish volume that's been holding us up for the past couple of weeks. This has been diminishing, and now on the weekly time frame, you can start to see that bearish volume is coming in. If we come over to the Chicago Mercantile Exchange and we monitor the liquidity and the book depth for the E-mini futures, so basically looking at how liquidity is doing in the SPX, the S&P 500, on the yearly, on the quarterly time frame, monthly time frame, weekly, and daily. If you look on the daily, this is the one I specifically like. Let me get rid of the well, actually on the mid price, this does kind of show you that we are still making these lower lows and lower highs, even though sometimes we do have these little spikes. So what this really shows to me is that liquidity is vanishing. It's no surprise that liquidity is vanishing. We're raising interest rates, inflation's through the roof, real wages are going down, the DXY is going up, you've got the US government bonds skyrocketing, and I think until the US government bond yields start to top and still they start to have a significant pullback, I really just continue to expect the DXY to keep on tearing faces. I mean, let's look at the DXY. We talked about this in our last video. We're predicting a move up to about 117. We've come up about 0.5% so far, not looking too bad. I still think we have about another 4% to go until we're likely to see anything like a local top. Like, for example, I wouldn't be surprised if we did this, come back down to the support region around about here or here before bouncing back up. So for the next week or so, I think a lot of charts line up. You know, the Euro 10-year bonds for the government yields are going up. The US 10-year yields are going up. The DXY is going up. Everything we're looking at, SPX coming down into new lows. It looks like we're going to be targeting these price gaps all the way down at 3537. So for these reasons, my friends, I am now shorting Bitcoin at the level I mentioned at the start of this video, 19,300. If we push up to 19,600, I'll be adding to my shorts. If we push up to 20,300, I'll be adding to my shorts. And if we push up to 21,000, I will once again be adding to my shorts. So that's all I've got for you today, my friends. I just wanted to update you on the next trade. This video was a little bit more a cappella than normal. I've recently started heavily editing my videos, chopping in clips, and basically that just means that I can get a lot more information in a shorter video. I'm extremely busy today. I wasn't expecting to make a video, but nonetheless, when I did see, you know, the Euro 10-year yields are going up, that is definitely a big signal. But the US, that is what we're looking at. This is really what we want to see continuation on if we want to still continue seeing lower price targets in Bitcoin in the stock market. So like I said, I wasn't expecting to make a video today. I'm extremely busy, but when I do see these important signals, no matter how busy I am, I will keep you updated. So if you do appreciate that, make sure to like, leave a comment. It really helps the algorithm. But yeah, for now, cowboys, That's all I've got for you today. Make sure to follow me over on Twitter at 618_cowboy. Make sure to join the Discord. That is in the About section on my YouTube. You can also find it in the description down below. For today, my friends, best of luck in these markets. Cowboy out. Peace.